Global Markets Reporter at Nasdaq, back with our annual Singapore Fintech Festival coverage. Organized by the Monetary Authority of Singapore, the Singapore Fintech Fest is on its 6th edition. We're proud to be a media partner for the 4th year in a row. Joining me for this segment is Richard Brown, Chief Technology Officer of R3. Richard, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
What are some of the privacy limitations of cloud computing and how confidential computing can help to plug the gaps?
Probably the easiest way to think about it is to first think about our personal lives. Every day we log on to our favorite social media site. We've all been trained to look for that little padlock. That's how we know we're secure, apparently. But nobody ever thinks, well, if we're secure, why are there all these stories about the social media sites selling our data? Those two things don't seem to make sense. And the answer, of course, and this is a problem for businesses as well, which is the padlock tells you you really are sending data to who you think you are, but it says nothing about what they will do with it once they receive it. And that is absolutely fundamental with cloud computing, because we're moving ever more processing, ever more data to large cloud providers, and there are no technological protections over what they or a rogue employee can do with your or your customers' data. The vision of cloud computing is to change all that and to create a world, create a possibility where you do know what will happen to your data when it's in the hands of somebody else on somebody else's computer.
In embedding trust within data software and services, how can confidential computing pave the way for businesses to actually unlock greater value?
It's a great question, because given that problem that you can't trust what happens to your information when you send it to somebody else, invariably what companies do is simply not share it with other firms or with third parties if it's sensitive. And that leaves so much low-hanging fruit uncollected. Let's just take one example from one that I guess everybody will understand, car insurance. Put yourself in the feet or the head of a car insurer. You're processing a claim. How would you know if the claim you're processing is actually fraudulent and that customer had actually raised a claim with 9 other insurers in your country and was trying to defraud all of you? The data is so easy to check. You just need to see, are you processing a claim for the same car? But to do that, you would have to bring that data together. You'd have to pool it so you could look for those matches to see if the same car was being processed by more than one of you. But of course, in many countries, you simply can't do that. Regulation forbids it. Competition would make it too difficult. What if somebody learned about your underwriting practices? And so really easy opportunities with really simple solutions such as that go unexploited because you simply can't trust what would happen if you brought all that data together. Confidential computing gives you the opportunity to do that. Those insurers could pool that data, they could spot that fraud, they could eliminate that kind of loss of funds, they could reduce the fees for all their customers. And there are examples like this littered across all industries. The solution, I guess, the very essence of it is, if you can bring data together and be sure how it will be processed, there are so many more opportunities you could exploit for your benefit and those of your customers.
And from wholesale to retail, are CBDCs the future of payments? And I'm assuming CBDC is cloud-based data center, is that correct?
It's actually interesting because that phrase is used in 2 different contexts. So the talk of the town at the FinTech Festival was the other one, which was central bank digital currencies. And this is something that's really hot on the minds of banks, technology companies and central banks. And it's all about, in the retail case, so for us as consumers, what happens when the use of physical cash declines to irrelevance? We could all just continue using our cards, paying online, but cash has this really interesting property that it's truly peer-to-peer and it's unstoppable. If I've got cash in my wallet, you've got coins in your purse, you can pay somebody else directly and you don't need anybody else's involvement. You don't even need their permission, which is good or bad, but there's no technological equivalent to that in the mainstream world. So the question is, does society, do our banks, do our governments have an obligation to give us that ongoing right that we presently have only in the physical realm? And then over in the wholesale world, it's a bit different. It's about, as all the major central banks are renewing their central systems and upgrading how they process payments, should more and more high-value transactions be settled in central bank money, the highest quality type of money with no counterparty risk? Should more transactions be settled that way? And if so, what should the architecture of those systems be to make it easy, cheap, and enable innovation? There's a huge amount of debate happening all around the world about this topic.
Right, and from Singapore's project, you've been to Thailand's project, and Thin and Online Rock. How has collaboration between the public and private sectors, how can that spark CBDC innovation?
So I'd say it already is, and I think it's working really fantastically well. And I'd include the Bank of International Settlements, BIS, in this as well. If you think about something like a central bank digital currency, where you have private sector technology providers such as mine at R3, we think, and competitors and peer firms think our technologies could be really helpful. But of course, a central bank is almost like the quintessential public sector institution, and so we have to work together. And the thing that's been so, I guess, so positive over the last few years is how well that partnership between private sector firms such as mine and institutions such as the central banks has worked. There's been a huge amount of partnership, mutual respect, and innovation.
Right, that's encouraging to hear. Richard, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.